Firstly, this video is an excerpt from my mega analysis that concludes in a detailed stock market trend forecast into the end of 2023 that was first made available to patrons who support my work. So, for immediate first access to all of my analysis and trend forecasts, then do consider becoming a patron by supporting my work for just $4 per month. Lock it in now, as it's set to rise shortly after the new year to $5 per month. Do you want to know what tends to drive the stock market into the stratosphere as we saw during 2021? US deficit spending. Actually, the twin deficits including trade. So here's the Dow divided by the annual US deficit. Usually the lower the reading, the better the prospects for the stock market, because the stocks are being fueled by rampant money printing, deficit spending that gets monetized by the central bank on an epic scale, all whilst MSM focus on smoke and mirrors tapering. What a load of nonsense. The smaller the bars, the more the US government is pumping into the economy and stocks. As you can see, despite the US government attempting to rein in the budget deficit to $1 trillion, the US government literally continues to inflate stock prices because most of the spending that's going on is for consumption and not investment. Or a one-off such as the war. We've got the Ukraine war. Let's give them, what is it? I think it's something like $70 billion. Just print it and give it to them. Pump up the arms industry. Pump up Lockheed Martin and the rest. So it cannot stop without triggering severe economic contraction. What's the price for rampant money printing? You know what it is. I've been banging on it for years. Inflation, real inflation, that's a lot higher than CPI, the fiddled and manipulated annual rate. The masses are being hoodwinked to focus on the annual rate of change of CPI that masks the true extent of the inflation that's taking place, that I warned years ago that I expect will run for the whole of this decade. High inflation for the whole of this decade. Zoom out of the annual CPI chart and look at the 10-year rate, which gives you a clue of the real inflation pain that's come and yet to come, because inflation compounds. Annual CPI is smoke and mirrors, as if CPI falling, say, towards 3% during 2023 is a case of inflation pain is over, it's all done. We got inflation down to, 3.5%. That will somehow erase the impact of high inflation of 2022 that is masked by the annual rate of inflation. Again, look at the 10-year chart. Focus on this. No one, from what I can see, no one produces a 10-year chart except for me, because they don't have a clue. They call themselves economists. They don't have a clue. They focus on CPI, which is a fake inflation measure that underreports real inflation by at least 50%, and then they focus on the annual rate, which conveniently erases the spikes earlier on that compound. Inflation is compounding each year, which is obvious if you look at the 10-year chart. And this video is merely an excerpt from my extensive analysis, truly extensive analysis. It's mega analysis, even from my standards, it's a mega piece that concludes in a detailed stock market trend forecast into the end of next year, end of 2023. A detailed trend forecast that tries to map out the trend for the Dow into the end of 2023. That's why I needed to do the extent of the analysis I had to, because to settle on a high probability trend forecast, and which was first made available to patrons who support my work. So for immediate first access to all of my analysis trend forecasts, then do consider becoming a patron by supporting my work for just $4 per month. That's nothing. $4 per month, that is nothing. And my forthcoming, you get access to all of my recent analysis apart from this mega piece, and the schedule of analysis includes US house prices trend forecast. That would be 3-year trend forecast. I already released a preliminary forecast, so I had to hit the pause button on that to focus on the stock market, but I've done 80%, so I've got a rough idea where it's going. I just need to finish it and fine tune it. That would be my next piece, mega piece. And then there's regular analysis, updates on the state of the stock market portfolio. Then there's the global housing market. I'm going to do that about halfway done. Then we'll look at the detailed look at the British pound and US dollar, even though it is included in this analysis. I have done analysis of the dollar, which is important. And then I'll update the high risk stocks portfolio. There's 2 of them. There's the mid 2021 and the February 2022 portfolios. And I'll have a look at the crypto market. Is there any sign of life there? Is it falling enough? I remember when I did the analysis last year, I was looking for around 83% drop in the Bitcoin price. Has it fallen by 83%? The high was around 70,000, so I don't think it's got there quite yet. And then I'll have a look at gold and silver, though it's not top of my list. And for Christmas, a special, how to get rich. This is not some garbage. This is step-by-step guide of what you need to do. There's no easy way to get rich, but I'll do my bestest to teach you how to get rich. Hardcore, no waffle, direct points, step by step how to get rich. That will be posted during Christmas. That's a mega piece. That's what I'll probably update that annually, as I add more stuff to it, because step by step guide. So for all of that, do consider becoming a patron by supporting my work for just $4 per month to get immediate access to all of my analysis and trend forecasts. $4 per month is nothing. And do remember to subscribe to this YouTube video for new videos. Gaining access to over 35 years experience, right from before the 1987 crash straight through to this stock's bear market, that will ride the quantum AI megatrend into the future.
Should old acquaintance be forgot and never brought to mind? Should old acquaintance be forgot and all lang syne? For all lang syne, my dear, for all lang syne, we'll take a cup of kindness yet for all lang syne. For all lang syne, my dear, for all lang syne, we'll take a cup of kindness yet for all lang syne. For all lang syne, my dear, for all lang syne, we'll take a cup of kindness yet for all lang syne.
Yeah, hey, hold it. Yeah, the reflection.